Gareth Soloway, a pro trader and macroeconomic analyst, has returned with an updated study of cryptocurrencies and other asset classes, including equities and bonds. He brings out the inverse relationship between the market and the dollar. He asserts that when the value of the dollar declines, markets soar. Yet lately, this hasn't been the case. Many economists, market strategists, and analysts are forecasting asset prices and performance in 2023. While others anticipate less positive results, some forecast that gold and cryptocurrencies would perform nicely. Gareth Soloway, CEO of infamousmoneystocks.com, discussed his outlook for gold and cryptocurrencies like Bitcoin on January 27, 2023, in an interview with Kiko news anchor and producer David Lynn. Solway offers several bits of advice for aspiring traders and investors who want to profit from the market. We'll now begin the video in its correct context. Please remember to use that like button, subscribe, and comment buttons below.
Bitcoin remains in this channel. Notice the channel here, guys. Now, notice Bitcoin is getting a little bit of an up move today. All right, that's a weak dollar response. That's normal. All right, now my issue here is that, number one, we have a defined major top at 25,200 to 300. So that's your line in the sand. As long as that holds, you have to be on the negative side of Bitcoin. It hit resistance. It's pulling back off resistance. The other issue here is, take a look at this. Basically, we had the 4 down days in a row, 1, 2, 3, 4. And then what's going on here? Let's draw a trend line in and put it in right there. That's a bear flag, an in spirit of bear flag starting to form. So when I see this pattern, what it tells me is that probabilities are now favoring downside on Bitcoin. Even if we get a little bit of a bounce here and there, as long as this pattern holds, essentially as long as price stays inside of this channel, you have to start thinking that Bitcoin has downside. Where's downside going to take you? The low end of the channel would be your first target. That's around 22,400. If that breaks, which, by the way, upsloping channels, if you look at a million upsloping channels, you'll see about 80% to 90% of them eventually break to the downside. Could be a month from now, could be 6 months, doesn't matter. The point is, an upsloping trend line, 80 to 90% of the time will break to the downside. My guess is the break to the downside happens within 2 months, if not within a 1 month period. Okay, so that's your Bitcoin analysis. Again, Bitcoin right now chopping sideways. Again, reminder, that is a classic in spirit of bear flag. Bear flag by the name indicates that the probabilities signal downside coming. Let's go to gold. Let's talk a little bit about gold. Gold continues to bounce. I call this to a T. All right, so when we were number one, you guys know I've been bullish on gold for a long time. All right, but there was a point when we were up here on the chart of gold where I said to you guys, listen, I'm not advocating buying gold up here. Let it pull back. It's run too far. It's run too fast. No chart goes straight up, at least on a healthy basis, and no chart goes straight down on a healthy basis. So what do you want to do? You want to wait for a retrace to the scene of the crime. This is classic methodology from the Winning Trader series, available at verifiedinvestingeducation.com. And I teach this stuff. I teach all the ins and the outs there. But the bottom line is, look at the retrace and look at the level. Pivot high, choppy breakout, retrace to the scene of the crime. That was your buying opportunity right there. I picked up some GDX. I picked up some other things out there. Again, if you're a member of inthemoneystocks.com, you know exactly what I picked up over the last week or so as we were coming into this level. Gold is having a nice bounce today. GDX is up, etc. All right. I still believe gold will be the best performing asset. All right, I talked to you guys via a post on Twitter recently about where I expect the chart of the S&P to go. All right, over the next 12 to 18 months, I'm anticipating a drop on the S&P 500, another 22% to downside to this long-term trend. Now, you'll have big bounces along the way. Don't go and misconstrue what I'm saying. I'm not saying that we're going straight there in the next 3 weeks. I'm saying that over the next 12 to 18 months, we are going to meander down to this level down here. All right, and again, that's right around 3,000 on the S&P 500. So what that means is that S&P is going to underperform. If the S&P is underperforming, you better believe that Bitcoin is going to struggle as well. It's a risk asset right now. All right, yes, I do believe there'll be a pivot point where it becomes more like gold. That's not yet. We still have to wait for that to happen. Probably coincides with regulation and bigger money starting to feel comfortable getting in the crypto space. But bottom line is, if we head down here, assets across the board are going to go down. I do think gold would gain traction, though. Gold is a safety asset. It's also an inverse dollar play. The dollar at some point, and we're starting to see it now, starting to weaken, and the markets are not rallying. There's going to be a point where the dollar is falling, and this is the scariest of all. The dollar falls, and the markets fall too. That's the worst case scenario. That's telling you we're in a very bad recession when that's happening. And even with lower rates, and this is the key, even with lower rates, what that's telling you is that the market doesn't believe that the recession will end, meaning the Fed has lost control. And that is the worst case of all scenarios, where the Fed loses control. I have silver. I want to cover silver just a bit here. And if we flip over to the daily chart on silver and we go and reset the chart, what we can see, guys, is silver just tagged some major support. Pivot low right here. Look at the bounce on silver yesterday. You're coming back in just a little bit. Partially, you're getting a small bounce in the dollar now, even though the dollar is net down. But again, we are getting a little bit of a bounce here to the upside. So I believe silver is a longer term buy. It's a little bit trickier. Remember, silver is not as easy to map as gold. The reason why it's not as easy to map is because it's an industrial metal plus a store of safety. So you have to understand that gold is a pure store of safety. It basically is, right? And when people are fearful, they buy gold. When the dollar drops, you buy gold. All right, that's just the simplicity of it. With silver, you have industrial production issues. So if the economy really slows, silver could struggle. And I say could, it could struggle just a little bit if there's a less demand on the industrial side for silver. So it doesn't mean, by the way, I still love silver mid to long term, but it just means as we go through this period of kind of maybe recessionary action with jobs numbers potentially weakening over the next few months, etc., it could be an issue here for the overall markets. So natural gas, everyone was saying, oh, Gareth's lost his ability here. He doesn't know what he's doing. All of his previous amazing calls were a fluke because natural gas is going to go down and it's never coming back. Well, what do we see here? Look at that. 1, 2, 3, 4, 5 up days in a row, small pullback right here. And ultimately, I ended up making a profit on my Boyle trade with members of InTheMoneyStocks.com. This is one of the reasons. And by the way, it wasn't that my first entry was perfect. It was off. I was incorrect. Let me rephrase. I was incorrect on my first entry. Traders are going to be wrong. I'm going to be wrong. I've been wrong many times before. I'll be wrong again. The key is, how do you manage the position? Okay? How do you manage that position? And the way I did it was I started small when I started to accumulate. When we were in free fall on natural gas, I started to inch in, which enabled me to continue to buy dollar cost average as we were coming down. And that basically got my average down in the lower ranges so that when it bounced, I was able to make some good money. And that's something that, again, is so important for us as investors. In fact, I'm going to go to full screen on myself for this because I want to talk a little bit about this. So as a trader, you have to remember that you're going to be wrong. The retail crowd and listen, I was like this in the beginning. And listen, for years I was like this, where I would be like, oh, that's a great spot on this trade, or on this stock or on this crypto or whatever. So I'm going to go put all the money I think I'm going to need into this trade at that point. And ultimately, I'd find out that I was wrong quite a few times. And the key was I didn't have the money because I put too much in. I didn't have enough money to maneuver and trade around the position. Okay? So again, the key is that by doing this, folks, by dollar cost averaging, by starting small, it's a mentality change. Stop your mind from thinking it's a no-brainer winner. And every time you take a position, assume you might be wrong. And by assuming you might be wrong, you're not going to put a ton of money in, I guarantee it. And that's going to change your whole ability to maximize profit by trading. I became a 10 times more profitable trader when I made that mentality switch. And so it's really a mindset. It's not the cocky mindset of, oh, I just want to double, triple, quadruple my account in a month. It's the mindset of, I may be wrong. I've been burned many times. So let me start small. And that actually increases your overall profitability. Very cool stuff, guys.
What do you think of Soloway's most recent analysis? Post your comments in the space provided below and let us know what you think. Please remember to subscribe, like, and enable notifications. Thank you for watching.